lost it. There it is. Hey, thank you for joining. We're going to give everybody just a few minutes to hop on. Can you hear good? Sound good, everybody? Thank you. We had a little bit of trouble with one of our other lives with the sound, so I was making sure we were good. We'll give everybody just a few minutes to hop in, and we'll get started on recap and Q&A for homeowners. You guys had a good week? Had one insured call this morning and said that think we're looking at thanks for joining, Jess. One of the insureds said that we're supposed to have another round of storms next week. I haven't seen that yet, but I'll look into that. So hopefully, we need to get those homeowner policies in line before those storms hit, for sure. For sure. Thank you for the like. Thank you for the share. So we'll kind of get started a little bit now. We've got a few in the room. We'll kind of get started with you guys. So this week, last week was personal auto that we went over. This week was homeowners. We started out with the dwelling itself. Coverage of the dwelling was on Tuesday, and those videos, both videos are posted, the Tuesday and the Thursday, so you can go back and watch them if you need to. But just kind of to recap on your dwelling, I would say some of the biggest things that we have come in is that dwelling coverage enough to replace that house in the event of a loss? The other one would be, check your other structure coverage limits, personal property limits, those type things you want to check. But as far as the dwelling, you want to look and see in those policies, one, do I have enough coverage? Two, is it actual cash value or is it replacement cost? And three, do we have any exclusions within that policy? So that would be my advice on the dwelling. Now, we obviously can go into some endorsements like equipment breakdown, which would cover your food. And we just had this happen, and I'll actually catch that on a video next week on a post. But we actually had this happen with the recent ice and snow where power was out for several days there. And while it was out, food spoiled. And then when the power came back on, we had an insured that did not. They had 3 freezers, I believe, and one of them did not come back on, and a new refrigerator did not come back on. Fortunately, they had equipment breakdown on their policy, which was an extension of their dwelling, which came in, picked up, and paid to replace that refrigerator and that freezer. So there's some things like that within your policy. We will touch on those because those are options that you can add to it. But this week was dwelling and was liability. As we spoke of on the liability side, you really want to make sure that you have enough liability limit on your policy, whether that be your auto or your home, to cover your personal assets. So, and what I mean by assets, that's anything you own or liquid assets. If you have cash, so your bank accounts, your cash, and what you own. So if you own that home, and just say that home values at, and I'm just going to throw a number out, but say that home values at $300,000. Well, if it values at $300,000, but you only owe $2, then you've got $100,000 of asset there that, in the event of a lawsuit, somebody would be most apt to go after. So keep in mind the liability side. You want to make sure that you're covered to the point that it would cover your assets where you don't have to dip into your personal pocket. So that would be my advice on the liability side. Dwelling, again, just make sure you got that dwelling covered enough to replace it if that's what you want. We certainly don't mind. We look at policies every day. We don't mind you self-insuring anything. So if you come to me and you say, hey, I understand it's going to take 300,000 to rebuild this house. I only want $250,000 worth of coverage. Now you have to watch on that. So you want to stay within, depending on carrier. And these videos are not carrier specific, as we're an independent agency, so we have multiple carriers. But you're going to want to be at least 70%, because if you drop below 70% of that replacement cost, then you're going to be looking at them penalizing you in the event of a total loss. They're going to actually penalize you on that policy. So keep that in mind. You want to stay 70% or higher of whatever that replacement cost is. We have some questions that we'll get to in a minute that'll kind of answer some of these things for you. About how you derive that replacement cost and those type things as far as the dwelling itself. That was Tuesday, so that kind of recaps Tuesday's post. Thursday's post was on your personal property. Now, personal property, a lot of people think about the big things. You think about those couches or those TVs or electronic equipment and computers, that type thing. Most people will think about those when they think personal property. And you'll think about your clothes, whatever. The thing to keep in mind is personal property is not just your big items. Your personal property is all of your items. So that's kitchen items, utensils. Now, if it's connected to that home, then it would be covered into the dwelling coverage of that home. If it's not built in to that home, it is personal property. And that's the easiest way to kind of keep it. If you just kind of draw a line in the sand, so to speak. I've had horses that kind of draw a line in the sand. I actually had a buddy of mine scored a hill horse a good bit when we first started heeling on him, and that horse got to swaying his head back and forth kind of when we were trying to score to draw a line, so to speak, in the sand, So, but that's kind of drawing your line in the sand. And then certainly reach out to us and we can tell you which group it needs to go in, if that's built in as part of the dwelling or if that's actual personal property. But people often think of personal property as the big items. One thing to look at on that personal property, is it actual cash value replacement or is it replacement cost? Just like your dwelling, if you get into those actual cash values, you're going to be looking at depreciation. So kind of like we said on Thursday, you take that 10-year-old couch that you may have paid $3,500 for 10 years ago. Well, if you're on an actual cash value replacement on your personal property, it's not going to replace it at $3,500. It's going to replace it at a fraction of that. So it's going to deduct or depreciate 10 years of that value. So that's just something to keep in mind on the actual cash value of personal property versus replacement cost. If it is replacement cost, it would replace it for what that couch cost. So that's one thing, and it's going to stay within your limits. Most likely, if you've reviewed your policy and you've got your limits of your personal property in line with what you have, it's most likely going to replace it, even if it's more than $3,500, because your limits are going to be high enough, and it doesn't drop down to a per item limit. You just have X amount, which is your personal property limit, and as long as everything's replaced within that, that's what you're going to get. So that kind of just gives you an idea on your personal property, and that kind of recaps it pretty good. And we also went over some special limits on Thursday, things like jewelry, firearms, those collector type items. Most of those are going to be excluded, capped, or very limited within just a standard homeowners policy. Now, we can increase those limits as unscheduled items, or if it's a high ticket item, we can schedule it with some carriers. Some carriers we can't, but we can write a separate policy to pick up coverage for that if you're with a carrier. And we look at both ways. We'll take a carrier, break it down with the quotes, and if you're better off with two policies to pick up those collector items, and you're still at the end of the day, what we're looking for is the most coverage for the best premium for you. So if that means 2 policies to do that, that's what we're going to do. If it means moving from this carrier to this, from carrier A to carrier B, and getting it all under 1 policy, then that's what we're going to do. So we think inside the box and outside the box here at Insured Family. So we go over these every day with clients. Certainly don't mind going over yours. So just give us a buzz on that if you have it. That kind of recaps Thursdays. So I'm going to get into some questions that we had come in Tuesday and Thursday via comments and direct messages. Let's see. Our first question we had come in was, is my home insured for what it would sell for? So to answer that question for you, no, it wouldn't. Your home's not insured for what it would sell for, and this is why. So if you look at what your home would sell for, you're looking at market value. Well, things with market value is going to be, you got to look at the land that's included, the location is going to be included, supply and demand. If you're in an area where the school district's really good, people are trying to get in there, that the demand is going to be higher than what the supply is, so that home's going to sell for more than what it would cost to rebuild it. What insurance looks at is what it costs to rebuild it. It's going to factor in materials, labor, time. Those type things are going to be factored into the replacement cost or the rebuild cost. So your insurance is not going to cover resale or market value price. It's going to cover rebuild costs. So hope that answers your question to that. Thank you guys for joining. Looks like we've got several coming in today. Second question we had was, how do I know if my dwelling coverage is enough? That's going to be pretty simple. Reach out to us. We'll be glad to look at it. Yes, if you drop back to say 2018, 2019, from then to now, there has been a huge amount of inflation. And I'm sorry, I'm gonna have to. We don't get into politics there, users. So we're gonna have to get you out of the room. But thanks for joining. All right. Sorry, I had to delete someone there, which I haven't had to do with Insured Family. But we don't get into politics here. That's not what we do. We love everyone, and we just try to treat everyone like family. So, but anyway, to go back to how your coverage dwelling is enough. So we can run, with most all of our carriers, we can run replacement cost estimators. That's going to give us an estimate of what your replacement cost would be. Now, again, like I said earlier, you're going to want to stay, you may not want to be at replacement cost. You want to stay in that 70%, 80%, 90%, or 100% coverage value there of that replacement cost. Now, replacement cost can fluctuate. So we put that in. The way we do that is we break your home down. So we'll take your home, we'll ask you questions of what the interior is like, what your finishes are, whether it's a basic finish, a contractor's grade finish, semi-custom or a custom finish. So you can take the same, just say 2,200 square foot house, and you can greatly change a baseline and a top line for replacement cost for that. All in by the finishes you have on the inside and the outside as well. So keep that in mind. And what we do is look at your particular house, how it's finished, how it's constructed, and we try to derive a replacement cost estimator from there, which gives us a good idea. Then we would talk with you and say, okay, is this good? Are you good with the replacement cost here? If you are, do you want 100%, 90%, 80, 70, and so forth? If you want to change that, we can certainly go up. And there's another way that we'll catch next week. You can also add extensions to replacement cost. Most carriers will go up to 25% extension on that, which say you've got, 100,000 and replacement cost, and you want that extension, then it'll cover up to 125 with most carriers. But that is an option that has to be added to, or an endorsement has to be added to the policy. So keep that in mind. Thank you for the gift. So hope that answers your question on how do you know. if your coverage is enough. Certainly reach out to us. We'll be glad to look at it. That's what we do every day. So thank you for the repost. Uh, the third question we had come in was, what's the difference between replacement cost and actual cash value? Very good question. So, and this applies to your dwelling, and this also applies to your personal property. So keep in mind, actual cash value is going to use a depreciation factor. So if you've got, say, 10,000 coverage on something that's personal property, I'm just using an easy number. That lifespan of that product is 10 years. You have a claim in the 5th year, they can depreciate up to 50% of that value. So if you had 10,000 coverage on it and it's half of its life has been used, they depreciate 50%. You're only going to get 5,000. So that's actual cash value. They are going to depreciate. Now, a lot of times the adjusters will be a little lenient on that. So, but you are at the mercy of the adjuster and the carrier if your actual cash value. So keep that in mind. Replacement cost value is just that. It replaces it of what it costs today up to the limit of insurance. So in other words, if you've got $250,000 coverage on your dwelling and you have replacement cost, as long as it stays 250 or less to replace it, they're going to pay to replace the home. If it goes over 250, they're still going to stop at the 250 because that's your limit of insurance. However, if you endorse with a 25% extension, you would get another 25% on top of that, which would be about 67,500 if my math, no, 62,500 if my math's correct off the top of my head. So that's the difference in actual cash value and replacement cost value. Most homeowners we have are going to be on replacement cost value, and certainly if you have a newer home, you want to be in that replacement cost value versus an actual cash value. Some of the older homes, we do have insurers that want to stay with actual cash value, and that's certainly fine. As long as you're okay and you understand that you could have to pay some of that out of your pocket because they're going to depreciate, then that's certainly fine. Let's look at what our fourth question was. Had one that said, does my homeowner's insurance cover my stuff outside the house? The answer to that in simple is most policies do. Most carriers, most policies will cover your belongings outside of your home. However, your limits of insurance is still going to apply. There's not going to be an extension of limits there. It's going to apply. Whatever the limit that we have the policy written in will apply. But it will cover theft, like if you have personal property in your car and it's stolen out of your car, then your homeowner's insurance. And a lot of people will think, well, my auto insurance should cover that. It doesn't. It goes back to your homeowner's policy because your auto is an extension of your home in that regard. So another thing, a lot of times you'll have like storage units. So if you have your stuff stored in storage units, you would have coverage there as personal property and temporary storage. So hope that answers your question. The next question we had was was a pretty good one. I kind of laughed when I saw this question come up, but it said, why didn't my agent explain any of this to me? Um, I don't know. That's a tough one for me to answer. Most policies are sold. They're not explained or broken down. We don't sell policies here. That's not our goal or our mission. Our mission is to treat every single insured we have like family. I'm not gonna sell my mother or father. They're not here, but if they were, I'm not gonna sell my mother or father or one of my brothers. I'm not gonna sell them a policy. I'm not in the business of selling insurance. I'm in the business of helping people. And so what we mean by that is we're going to break your policy down. We're going to look at it, see what's best for you. And I've had instances that we looked at a policy and I have actually told insureds, hey, you're actually better off with the policy you have than anything we currently have to offer. Now, in saying that, most of the time, the very next year, they're going to call us back. and we're going to go back to them. So our goal is to educate our insureds. We feel like that an educated insured makes better decisions on their policy. It's not just about sales and premium for us. It's about policy, coverage, and family. So hope that answers your question. But it was a pretty good one when it come in. I got pretty tickled reading it. Um, so that's that's kind of where we're at, and it kind of recaps. And that was all the questions that we had that come in this week. There were some more, but they kind of overlapped, and I think the answers that we had to those 5 questions kind of answered the other questions we had come in. So hope that helps you guys. Do we have any more questions that you guys want to ask today? Glenn joined. We've had some send gifts. We thank you for that. And for you guys that are sending gifts, if you'll look up there, you can click on that little heart beside our name, and you actually get daily gifts back. So you can claim coins or whatever it's called there if you click up here. So for those of you that are sending gifts, you can get your stuff back up there. So thank you for that, and thank you for the shares. So if we don't have anything else, really coming in, that was all of our questions. I don't see any more that's popped up. Thank you for the gift. Thank you for that. But anyway, I don't see anything else. I think that answers. I mean, all the questions I see that we got in on Tuesday and Thursday. I think those will answer everything for you guys. If any of these raise questions for you as to your policy, then that's normal. Don't worry. That's normally what would happen here when we go over something. Reach out to us. Our phone number is 662-263-3154. Again, that's 662-263-3154. And you can email us at contact@insured-family.com. And that's contact@insured-family.com. And we'll certainly answer them. And of course, you can message us on here as well. We watch those in the office, and one of us will get back to you, or they'll get it to me, and we'll go from there. So hope that kind of helps with that. So, but if you want us to review your policy, you can comment review here, or send us a message review, or email, and we'll get up with you, and we'll be glad to review your policy. That's what we do every day for insurance. So be glad to do that for you, and we'll let you know. If you've got a good policy, we'll tell you that. So just keep that in mind. Really just kind of, want to kind of go over everything and help you guys decide what's best for you, not for us, what's best for you. So if we don't have any more questions, next week we'll be continuing with homeowners. We'll look at that coverage B, which is other structures, and we'll get into loss of use, which is going to be coverage D listed on your policy. And we'll explain what those mean. We'll explain some typical gaps that we see where it comes in on claims and people or insurers thought they had that they did not. And at the end of the day, our goal is not, again, it's not to sell you insurance. It's to put you in a position that if you have that loss, that you are put right back in the same order or better than what you were prior to the loss. And doing that within your budget. So that's what we try to do here is help to educate you and get you to that point. So next week we'll go over those 2 items. We'll have on Tuesday and Thursday. Thursday we'll probably actually combine other structures, coverage B and coverage D, loss of use. We'll combine those on Tuesday. Then on Thursday, we'll probably catch the endorsements that you can add to that homeowner's policy. And of course, we'll come back next Friday live at noon to answer any questions and kind of recap. But I certainly appreciate you guys being with me and allowing me to have a little space and a little part of your time today. I thank each and every one of you, and certainly thank all of you for being a part of our family. And if you're not a part of our family yet, we would love to have you as a part of our family. And we'll be glad to help you in any way we can. We appreciate your time. Thank you guys. Y'all have a great Friday, a wonderful weekend, and do something out there to help someone else. If it's nothing but a smile, smile at them. So thank you. God bless each of you, and have a great day.